our next speaker, we're building on the theme of miners, right? We spoke to a couple miners earlier. We're bringing you more miners. Our next speaker is the CEO of a mining company that you all should have heard of, I would assume, frankly. Hut 8 Mining, ticker HUT on the NASDAQ. Jaime Leverton, there she is. Jaime, are you loose? Are you feeling awake?
I'm loose. I'm awake. It's
okay.
In Toronto.
Excellent. Thank you for coming on today. Guys, do we have Jaime's charts? Yes, we do. Let's get Jaime's charts on the screen. Jaime, I'm going to keep stretching, and the floor is yours.
Thank you, Spencer. It's great to be here. For those of you who are just getting introduced to us at Hut 8, I am Jaime Leverton. I took over as CEO here at Hut on the 1st of December last year. We are a publicly traded Bitcoin miner. All of our operations are located in Canada, so I'm coming to you from our headquarters in Toronto. We trade on the Toronto Stock Exchange as well as the NASDAQ. So I'll just take kind of 10 or 15 minutes and walk you through an overview of who we are, and then we'll have time for a little bit of Q&A. So if we can just go to the next slide, please. Disclaimers, of course, very important in an industry that's volatile, as we just heard from our last speaker. Next slide, please. So this is just a really quick snapshot. I mentioned we're headquartered in Toronto. We currently have 2 active mining sites, both located in the province of Alberta, which is within Canada. It's in the prairies. Our largest site is in Medicine Hat, where we have 67 megawatts actively in production. And then our second site is about a 2-hour drive away from Medicine Hat in Drumheller, Alberta, where we have 42 megawatts actively in production. So a total of 109 megawatts in production. And we are currently working on our third site, which will have approximately 100 megawatts at that site as well. So that'll bring our total power to 209 megawatts. We expect the first 35 megawatts of the new site to be live by the end of this calendar year. From a self-mining perspective, we currently have 1.37 exahash in production mining Bitcoin today. We also have a hosting component of our business where 13 of our megawatts are used to host 2 strategic clients. And then this year, we also started to put our Bitcoin balance to work. So we have the largest stack of self-mined Bitcoin of any publicly traded company in the world. The latest balance we announced was 4,242 Bitcoin, of which we use 1,000 Bitcoin to earn yield in through our relationship with Genesis, and then we have another 1,000 Bitcoin earning yield via a relationship with Galaxy. So not only do we have a large stack of Bitcoin, but we use a portion of that stack of Bitcoin to also earn revenue paid out currently at about a 4% rate of interest. So between the hosting line of business and the yield that we earn from our Bitcoin, it allows us to fund some of our self-mining operations, and then of course stack more Bitcoin. The other thing that we have recently announced is we are beginning to mine Ethereum. So we entered into a strategic purchase of CMPs from NVIDIA, enterprise grade chassis from Dell, and the team is very, very busy in the field right now in Medicine Hat, unloading those chassis, getting them plugged in and hashing. And we expect to have 1,600 gigahash up and hashing, mining Ethereum by the end of September. Although we will continue to settle even those GPU mining activities in Bitcoin as we continue to look for creative ways to grow that Bitcoin balance, which we believe in so strongly. So that is an overview of us by the numbers. You'll also see we've got some expectations laid out on where we are growing our exahash to. So we've ordered another exahash of equipment from MicroBT, which will deliver this fall. And so that'll bring our total of mining of Bitcoin between the exahash we use for Bitcoin mining and then converting the gigahash that we'll be using for Ethereum mining. That'll bring our total by the end of this calendar year, which is also our fiscal year, to between 2.7 and 3 exahash. And then we're looking to double that again in 2022. So very high level overview of who we are. Next slide, please. That's me. So I told you I joined the beginning of December after I have spent over 20 years in the more traditional technology space in Canada, working for a variety of tech companies that you probably know, including IBM, BlackBerry, Bell Canada, and then I've spent the last 4 years in the data center space with both Cogeco Peer 1 and eStructure data centers. And that's enough about me. Next slide, please. So this just talks about our growth through market cycles. So we were one of the first publicly traded miners to list originally on the Toronto Stock Exchange, the Venture Exchange, and then we graduated to the TSX last year. So this just shows how our power capacity has grown and continues to grow since we began, and then again how our hash rate has grown over the last number of years, and now adding gigahash as well as we look to create a bit of a diversification strategy so that we're not completely dependent on the economics involved in Bitcoin mining. We have the ability to offer some diversification, and that gives us some downside risk protection as these economics are quite volatile. We don't control all of the inputs, so by having a hosting side to our business, earning yield from the Bitcoin on our balance sheet, and being able to mine alternate blockchains using GPUs, it really gives us the ability to weather a variety of different market cycles. And we think that's certainly in our best interest and in the best interest of our investors. Next slide, please. And this just shows, based on the market conditions when we released this deck a couple of weeks ago, what we expect to be earning in Bitcoin per day based on the exahash and gigahash by the end of September, and then what we're looking forward to as that next exahash of equipment comes on by the end of Q4. Next slide, please. This talks about how much we love the province of Alberta, which is where our operations are located, as I mentioned, and where we will also build the third site. Alberta is well known within Canada for being our most energy-rich province, traditionally a very dominant player in the oil and gas space. The province of Alberta has been making incredibly significant investments as well into renewables. You can see some wind turbines in the background there of our site in Medicine Hat. They're building out massive solar farms within the province as well. So it's a great province or location from an energy perspective, but then it's also a fantastic climate. Alberta is very, very flat, as you can probably tell by the pictures. There's not a lot of humidity. Winters are very long, very cold. There's a lot of wind in the province, and that allows us to take advantage of free air cooling. So the environment does the work of cooling our equipment for us, meaning we don't have to spend extra power or extra money to cool the equipment. Our data centers are container based, as you can see in the photo, so we can actually open up the sides of the containers to allow that natural airflow to run through the containers and keep the miners nice and cool. And of course, they perform very, very well in this environment, which allows us to really maximize the productivity of the equipment. We're also unique in that we run our own facilities, so it's our own staff running these data centers 24 hours a day, 7 days a week, and we do our own on-site repair and maintenance of our equipment. Really, again, just looking to drive that maximum uptime of the miners in the field directly. Next slide, please. And again, we've been around since late 2017, early 2018, and so we have a long history of investing capital into our infrastructure, both from a power perspective, a data center or container perspective, as well as the mining equipment. So we have a fleet of equipment that we're constantly investing in. We brought new equipment from MicroBT in last June, and then again, we ordered more in January. We made the NVIDIA investment in the spring, and then we ordered another exahash from MicroBT just at the beginning of this summer, again, delivering in Q4 of this year. So we're constantly kind of making those investments on a regular basis. We also use one of the most conservative depreciation schedules in the industry. We use 2 years to depreciate our miners. So what that means is our older generation of mining equipment is still very actively in production. It's very, very profitable, and it's been fully depreciated. So we're able to really manage our balance sheet, manage our deployment of capital, and we think that gives us a great perspective as far as constantly investing in our fleet over time. Next slide, please. As we talked about, we are hodlers at heart. So we have been holding Bitcoin on our balance sheet really since we started. Originally, we would sell Bitcoin, as much Bitcoin as we needed to fund the operations of our business. Anything left over, we would keep on the balance sheet. And in the current environment, we actually haven't sold Bitcoin since early in January. We've been able to really grow that balance significantly during this calendar year, which we're incredibly proud of. And as I already mentioned, we have the most self-mined Bitcoin on our balance sheet of any publicly traded company, which of course means that Bitcoin got onto our balance sheet at a price point significantly below what you would pay in the retail market. Next slide, please. So our growth strategy, really quite straightforward. We are expanding our power, we're growing and optimizing the fleet. We are mining both Bitcoin and using GPUs to mine Ethereum, but as I mentioned, continuing to settle in Bitcoin as a long-term store of value. We are now able to generate a fiat revenue stream from the Bitcoin while we hold it on our balance sheet, really believing that over the long term, Bitcoin will continue to appreciate in value. And then we also have the hosting side of our business, which gives us a nice committed, stable cash flow as well. Next slide, please. So as I talked about, we are building out a third site. We're very, very pleased to have been able to negotiate an incredibly aggressive rate at 0.027 cents Canadian, plus or minus 10%, and that is an all-in rate. So we're incredibly excited to get that site built out. And as I mentioned, we do expect the first 35 megawatts to go live towards the end of this year. Next slide, please. So I think I've talked about this. I didn't mention our pool strategy. So we use a North American mining pool strategy. Foundry is our dominant mining pool for Bitcoin mining. And then we also are working with Luxor as our secondary Bitcoin pool. And that will be our primary pool used for mining Ethereum. I talked about the investment we've made in NVIDIA CMPs, specifically for that Ethereum mining purpose, and then our relationships with Genesis and Galaxy earning yield on the Bitcoin we hold on our balance sheet. And then our new site is very proudly being built with another great Canadian company, Validus Power, which we're excited to get up and running. Next slide, please. So this just shows the blue line represents our market cap as of the date we pulled this, and the orange line represents the Bitcoin on reserve. So really just showing our dominant position as far as Bitcoin held in reserve, and our market cap not quite reflective of that Bitcoin balance when you look at it in this view versus our peers and how they're holding Bitcoin on balance sheet. Next slide, please. And our management team. So I took over, as I mentioned, December 1st. Shane Downey is our new CFO who joined us beginning of March. Jason Zalewski joined as our head of technology beginning of February, as did Tanya Woods, our general counsel, EVP of regulatory affairs. Sue Ennis joined a couple of weeks after I did. Thank you again for that, Sue, to run investor relations and corporate development for us. And then in the March timeframe, we brought on Ronnie Yu to head up our power and sustainability for us. So we're incredibly excited by the team that we have around the table, and really look forward to continuing to drive a growth mandate. Next slide, please. This just goes into our financials a little bit. Next slide. All of this, of course, is available on our website, both the deck and more detailed information about our financials, which we released in Q2. We're very proud to put up our second consecutive record for highest revenue in our history in the second quarter. We continue to see growth from the ancillary lines of revenue that we have in our business, as I've spoken about, and really proud to continue to be able to grow that Bitcoin on our balance sheet, of course. Next slide, please. I'm not going to get into that. If you want to go into the details of our financials, please do look them up on our website, or of course in SEDAR. And then we also include in our deck a little bit more about the economics of mining, a glossary of terms used in our space. For those of you that are new to the world of mining, please do check it out, as it can help bring you up to speed on how miners work, how miners make money, and the inputs that you can use to kind of look at our business holistically. And I will leave it at that from a presentation perspective. If there are any questions, please let me know. Of course, don't hesitate to reach out to us directly as well. I'm the only Jaime Leverton on LinkedIn or Twitter, so you can reach out to me directly, or Sue is always available as well as our head of investor relations.
Thank you so much, Jaime. We do have a lot of questions. Frankly, I'm hesitant to ask too many of them because you're staying on with us for our next panel. So let me just pick one arbitrarily.
All right.
Okay. How will Ethereum moving over to proof of stake affect your mining of ETH in the future? We'll stick with that.
Sure. So the mining with GPUs, Ethereum is currently the most profitable thing to mine using GPUs or CMPs, which are the cards we purchased from NVIDIA. But if/when Ethereum goes proof of stake, and I think we could have a lengthy debate about what that will ultimately look like, both from a timing perspective and some of the nuances involved in how that transition is going to take place. But if there is a hard fork and it goes proof of stake in the short term, we would just move to the next most profitable token or crypto to mine, which currently, or the last time we ran those numbers, was Ethereum Classic. All
right, it's great. We'll do one more. Jaime, what is your opinion on paying up 12 to 15% for 110? What is that? 110 TH units versus 80 TH units, or 110 units versus 80 TH? Sorry, I don't really. That question is too technical for my. I shouldn't have asked it if I didn't know what I was going to say. So KCCom, sorry, KCCom.
KCCom, reach out to us directly with your technical questions.
Jaime Leverton, don't go far. We're going to have you back on in just 1 second.